What if Australia's biggest bank bought a rival for a bargain price, and then was accused of intentionally ruining thousands of its own small business customers just to save hundreds of millions on the deal? This is the wild story of the 2008 Bankwest acquisition. At the height of the 2008 global financial crisis, Bankwest's UK parent company was going under. Commonwealth Bank of Australia, or CBA, swooped in like a hero, snapping up Bankwest for $2.1 billion in what looked like a brilliant rescue mission. Here is the first major twist. Deep inside that contract was a special price adjustment clause. If Bankwest's commercial loans were found to be toxic or bad before the final closing date, CBA could legally force the UK sellers to discount the final purchase price. What if your bank suddenly changed the rules of your loan overnight while you were paying on time? Shortly after taking over, CBA launched a massive review of Bankwest's commercial loan portfolio. Business owners who had never missed a single mortgage payment suddenly received default notices. CBA slashed property values, altered loan-to-value ratios, and slapped penalizing interest rates on hundreds of small business loans. Here is the second dramatic twist. By classifying those loans as bad, CBA triggered the contract clause, wiping over $300 million off the final payout to the seller. Victims claimed CBA deliberately engineered defaults to claw back cash, wiping out thousands of Aussie business owners. What if an entire country demanded a royal commission to expose a banking conspiracy? Devastated borrowers formed action groups, taking their horror stories straight to Parliament and alleging systemic unconscionable conduct. CBA hit back fiercely, claiming they didn't engineer anything. They argued that Bankwest's former UK owners had run a wildly reckless growth strategy, handing out terrible, high-risk loans that were bound to collapse during the GFC anyway. Here is the third shocking twist. In 2018, after years of public outcry, the Banking Royal Commission officially investigated the clawback theory and declared it unproven, concluding CBA didn't systematically force defaults for the discount. What if the official verdict still leaves hundreds of victims convinced they were destroyed by corporate greed? Even though the Royal Commissioner cleared CBA of deliberate fraud, he admitted the bank treated borrowers terribly, using overly aggressive tactics to call in debts during an economic crisis. To this day, the Bankwest takeover remains one of the most controversial chapters in Australian corporate history, a terrifying reminder of what happens when small businesses get caught in the middle of giant bank mergers. Turns out, fine print buyout clauses can leave a trail of destruction. Subscribe to The Stick Attorney for more shocking corporate downfalls.